Alright, good evening. Let's continue. This is part 2 of Introduction to Financial Management. Okay, we have looked at the functions of the financial manager, the decisions that the financial manager makes. Okay, and now we move on to the next part, okay, which is and I seem to have some problems in shifting to the next page. Not know why. Okay, one moment. Right, let's move on. So we look at the forms of business organizations. There are three major forms. Okay, this is in the US, but also applicable to other parts of the world. There are three types of businesses. Okay, businesses can be categorized into three types. The first is called sole proprietorship. Okay, sole proprietorship means it is owned by one person. Single person owns the business and that person runs the business. Okay, so that is sole proprietorship. Then the second one will be partnership. There are two types of partnership. One is called general partnership and the other is called limited partnership. And we'll look at these two a bit later on. Then the third type of business will be corporation. Okay, this is the term used widely in the US, but here in Malaysia we use company. Company also means corporation here. Alright, so this is a limited liability company. There is a specific term, limited liability company, in the US. In Malaysia, companies have limited liability, and we'll see what is the implication of limited liability a bit later on. Right. Let's move on to the next slide. Alright, sole proprietorship. So what is a sole proprietorship? I've explained very briefly that it's owned by a single person and run by a single person. The business is owned by one person and it's run by that person. So what are the advantages? It is easy to start the business, okay, and the regulation is the least compared to. Of course, there will be some regulation. There will always be regulation. Depending on the country in which the business is being run. But compared to the other two types of businesses, this is the least regulated. Okay, there will be less regulation. There will be less rules to follow and things like that. Alright, then the other advantage is that the single owner keeps all the profit. Okay, whatever profit the business makes, it all goes to the owner, single owner. And the other advantage is that it's taxed only once, okay, and you'll see that is an advantage compared to another type of business, okay, where you may be taxed twice, for the same income. Okay, with a sole proprietorship, okay, you are only taxed once, meaning the individual is taxed, but the business is not taxed. Okay, that's the idea behind the taxation of sole proprietorship. But you have disadvantages as well. For sole proprietorship, it is limited to life of the owner. For example, because it is dependent on one single owner, when the owner passes away or decides not to continue with the business, then the business life is also limited. It also ends. Okay, but in other forms of business, as you will see in companies, this will not be a disadvantage. Okay, then the other disadvantage is that the equity capital, the amount of money that the company has, the business has, is limited to the owner's personal wealth. Okay, so if the business wants to grow, then the owner must put in her or his personal wealth, increase the personal wealth so that she or he can invest in the business. Okay, then the third disadvantage is that it has unlimited liability. What does unlimited liability mean? It means that the liability of the firm or the business if it is not paid using the resources of the firm, then the stakeholders, probably the creditors, can obtain the payment from liquidating the owner's personal assets, not only the firm's assets but also the personal assets of the owner. Okay, so the liability is unlimited. So that's a major disadvantage of sole proprietorship. Okay, and the other disadvantage is that it is difficult to sell the ownership interest. So if the sole proprietor wants to sell the interest in that company, or sorry, in that business, you shouldn't use the word company, because company is a specific type of business. So we need to be precise here. It means that sole proprietorship is a business, or you can call it a firm. Okay, and that firm, if you want to sell the ownership interest in that firm, it will be quite difficult to find a buyer, because it is difficult to transfer. It's not impossible. You cannot say it's impossible to transfer, but it is difficult to transfer. Okay, you must find a willing buyer and a willing seller, right? Therefore, it's quite difficult. All right, let's move on to the next. Partnership. Okay, this is the second type of business or firm, second type of firm. Okay, and the advantages is that you have two or more owners rather than one. Okay, in sole proprietorship, you have a single owner. You have here two or more owners. Okay, so that's an advantage. Okay, more owners means you have more expertise. Okay, and then you also have more capital. There's a second advantage here. Rather than depending on the capital provided by a single owner, you have more owners, therefore you have more capital. And then it's relatively easy to start, just like sole proprietorship. It's quite easy to start. Of course, it's slightly more difficult because you need to have an agreement among the partners. Okay, sole proprietorship, it is easiest because one person decides and then he or she can start the business. Alright, then income tax, once as personal income, just like in sole proprietorship, income, okay, from the firm or from the business will be divided to the individual owners, okay, and then the owners will be taxed only once. So the business will not be taxed, just like in sole proprietorship case. But you have disadvantages. Like here you have unlimited liability. Alright, that's one major disadvantage of partnership. Okay, but here you have two types of partnerships. One is general partnership, where in a general partnership, all partners are general partners. Meaning everyone, every single owner or partner in the firm is liable to pay for the liabilities of the firm. But when you have a limited partnership, okay, in a limited partnership, okay, there can be one or more limited partners. Limited here means limited liability. That is why they call it limited partners. So their liability in the firm will be limited to the amount of capital that the partners put into the firm. But even in a limited partnership, there must be at least one general partner. Okay, this general partner will pick up the liability, whatever that is not being paid by the capital. Then that general partner in a limited partnership will have to make good the payment, meaning they have to make the payment to the creditors and to the debtors, to the suppliers and so on, to the employees of the firm. All that will be paid using the general partner's personal assets in a limited partnership business. Okay, so this is a disadvantage. So even though the liability is unlimited, okay, generally speaking, in a partnership, the liability is unlimited for the partner. But in a limited partnership, okay, the limited partners will have limited liability, but the general partner in a limited partnership will have unlimited liability. Okay. So you need to see the difference between the two, clear difference between the two. Alright, then the other disadvantage is that the partnership dissolves when one partner dies or wishes to sell, because it's an agreement among the partners. Okay, so if one wants to sell her or his portion of the business, then if there are no provisions in the partnership agreement, then the whole partnership must be dissolved, and then you need to create a new, meaning the assets of the firm must be sold off to pay the employees, the creditors, okay, and then whatever that is left, then it will be given to the partners. Okay, so it's a bit difficult to dissolve or to transfer ownership. So these two key points, the last two key points should be seen together. Alright. Okay, now let's move on to the last type of business, which is company or corporation. In Malaysia we call this company, but in the US they call this corporation. The advantages of a company, it has limited liability, meaning the owners of a company will have limited liability. Limited here means their liability is limited to the amount of capital that they invest in the business. Okay, they won't pay more than what they have invested. But it is the other way, okay, the opposite, for for partnership as well as sole proprietorship. Okay, the other advantage for corporation is that it has unlimited life, meaning the life of the company is not limited to the life of the owner. Okay, so the life of the company is independent of the life of the owner, because there are many owners. Okay, and because a company has a separate legal entity, legally it is considered as a separate entity, therefore it has a separate life. It is not tied to the life of the owner. Okay, so it has unlimited life. Okay, meaning even if the owner dies, the business can continue, the company can continue. Alright. Then there is separation of ownership and management. This is an advantage, but you can see that this can also be a disadvantage. We will see that later. Okay, so this is an advantage here. Why is it an advantage? Because the ownership, maybe the owner of the business may not be skilled in managing the business. So you can hire skilled people to manage the business. The owners can just invest. Okay, due to the specialization of skills, so this is an advantage. But there is also a disadvantage to this aspect, as you will see later. Alright, then it's easy to transfer ownership in a corporation because you can sell your share of the company to anyone. So it's easy, not like sole proprietorship or partnership. And it's easier to raise capital. Okay. Then the disadvantage, there are two major disadvantages. One, it is double taxation. Income is taxed at the company level, and then dividends are taxed at the personal, individual level. And the other disadvantage is that this separation of ownership and control can lead to agency conflict. And we'll pick up on this agency conflict a bit later. So let's move on. Alright. So here we can compare the three types of businesses, okay, the three types of firms here, based on certain aspects or dimensions. We can see clearly the differences between among the three. Okay, you can see this here among the three. So this is a summary of what we have discussed so far. So if you look at the lifespan, this is limited for sole proprietorship and partnership. It is unlimited for companies. Liability, you have unlimited liability for partnership and sole proprietorship, but it's limited for corporation. Liquidity means ease of selling your shares. It is difficult to transfer ownership for partnership and sole proprietorship, but it's easy for companies. And financial resources, it's difficult to raise capital for sole proprietorship and partnership, but then it's easier for companies. So with